Okay, so on November 11th, markets just went wild. Let's dig into what was going on.
It was like a huge relief rally. Investors suddenly felt optimistic and started buying everything.
And you can see it right here. Major markets, from the US to Europe, just roared higher.
So what was the one thing that kicked off this massive buying spree?
Turns out it was all about Washington. Good news about the US government shutdown ending.
This kicked off what we call risk-on sentiment. Basically, investors felt brave again.
And the biggest reaction? You guessed it, stocks just surged everywhere. The tech-heavy Nasdaq had its best day since May. Just look at that jump.
Same story for the S&P 500, its biggest single-day pop since October.
And it wasn't just the US. The UK's FTSE 100 actually hit a new record high.
Now, this wasn't just about stocks. The good vibes spilled over into other markets too.
We saw money move out of safe currencies and into riskier ones, like the Australian dollar.
Yep, the Japanese yen, usually a safe bet, took a hit as investors ditched their defensive plays. Even oil got a little boost. Prices edged up as everyone felt a bit more confident.
Okay, but here's where things get kinda weird. Let's talk about gold.
If everyone's buying risky stuff, why did a safe asset like gold also pop? And I mean, it really surged, a nearly 3% jump to a 2-week high. Well, it turns out gold's rally wasn't about the shutdown. It was all about the Fed.
All right, so the shutdown news is kind of old now. What are traders watching next? Their focus is shifting to some big economic reports coming out all over the globe. So, with one crisis over, is the next big market move all about what the Fed does next?